Welcome everybody to Edison TV with one of our new formats, the Investor Hot Seat. I'm Johan van den Hoven, one of the equity analysts at Edison Group. I'm here today with Dr. Jelena Arsic van Os, CEO of Accsys Technologies, the company that changes wood to change the world. Welcome, Jelena.
Thank you very much, Johan. It's really a pleasure to be here.
We gave our audience opportunity to ask questions, but as we cannot ask all those questions in this interview, we have selected about 10 of them. To start off with, Jelena, could you please give us a short introduction of Accsys Technologies with the emphasis on the unique selling points of your products?
Accsys Technologies PLC is a wood technology company. We are using a fast-growing, sustainably sourced wood and then transform it through our proprietary process called acetylation and basically give it a superpowers. We are making one of the most sustainable, most durable, and most stable wood product available in the marketplace today. As a company, we see our unique value proposition sitting in this product differentiation. So we do have a genuinely premium product with a low maintenance cost, an unrevealed 50-year warranty, and the industry only established acetylation manufacturing footprint. We have very strong IP protection with the 27 patent families across 45 countries. It's more than 300 patents that are protecting our product and our process. And we have a unique brand among wood products, Accoya, Accoya Color, and Tricoya, that are actually accepted as a reference in the marketplace for the premium wood product available today.
Thank you, Jelena, for this introduction. You are selling your products to many countries in the world, as you said. Mm-hmm. Can you please give us an overview of countries that carry out relatively more wood construction? And is there a country still missing in your geographic areas?
Well, as you know, the US market is using quite a lot of wood in the homes and projects construction. So US is in the developed world quite the biggest market available. Our exposure is quite strong to the UK, to the DACH region, Nordics, Spain and Italy. And we are, of course, developing our business in Eastern Europe as we speak.
Okay, that's clear. Thank you. We recently have seen a decline in the oil price. What could be the potential impact of this decline on your FY26 results?
Well, we are operating in manufacturing sector, and of course, declining oil prices are good news for the manufacturing oil sector. That means that your energy costs are going to go down, your raw material costs may potentially go down, logistics costs, etc. It also means a lower inflation. Lower inflation means increased spend. So we are selling quite a lot of Accoya and Tricoya into maintenance and repair market. So, so it is a positive news for us. Now, if the falling prices of oil are resulting in a result of the lower demand, then maybe sometimes central banks may reduce the interest rates to stimulate the economy. And that for us would be, and for the whole global construction industry would be, of course, very, very positive news. So for us, the lowering of the oil prices is a good news.
Okay. Several investors are wondering how you manage to grow faster than the market within your key markets. Can you tell us a bit more about your current market shares, the expected market growth, and where your market share could end up within the next few years?
The wood building material market is a very large. Today, Accsys is having less than 1% of that market share in the US and somewhere around 3.5% in the greater Europe. That means including UK and Ireland and the countries in Europe. Now, most of our growth this year really came from the increased trust of the market that product is available, that it is so that people can go and use Accoya actively. You know that the company was struggling with the availability of the product before the latest expansions. Then we had 1 year where basically market had to adjust to the new demand and supply situation. And now we are seeing that we are regaining the market share that was lost over the last couple of years due to unavailability of Accoya. So today we are seeing this process going in a positive direction in both regions, in the US and in Europe.
Now a few questions about the Accoya plant in the US, which is operational since September 2024. Accoya USA is expected to break even in FY26 or even show a small profit. What are your assumptions for revenue development and capacity utilization for this year to realize this break-even level?
Now, we already communicated in January this year on our strategic path going forward that is going to happen around the three separate phases, so to say. And we also gave ourselves a target to reach 100,000 cubic meters of volume together in Arnhem and Kingsport at the end of the financial year 27. We are pretty good on that path to deliver that volume target. Even on 100,000 cubic meters, we will still have space to grow in both Arnhem and the US. So according to our strategic plan, only in financial year 28, we are actually going to come closer to the capacity of the both plants.
You recently published financial 25 results. You mentioned €1 million income from royalties from the US joint venture. Can you also tell us a bit more about this and how these royalty fees can influence your profit margins in the future?
When you look at the licensing business model, that means that the company, so in this case, a joint venture in the US, is paying a license fee to Accsys in order to use acetylation proprietary technology in the joint venture. Those license fee payments are one-off, if you like, payments when the plant is meeting specific conditions. But then on the top of the license fee payments, we are talking about royalties, which are actually coming with every single cubic meter being produced in Accoya USA.
Okay. The US dollar has recently weakened against the euro. What could be the effect on Accoya USA and on your reporting in euro?
So, of course, if you look on one side, we have a positive, and on the other side, we have some balancing effects as well. We are buying a specific portion of our acetic anhydride in dollars. So in that sense, in Arnhem, so that means that it has a positive financial effect. On the other hand, we are also doing the equity accounting of the profitability of Accoya USA, which is in dollars and then transferred to euros, and then you have a balancing effect of it. I think if having a local production in the US is very favorable for us. It is not only that it is the largest and the most profitable wood market in the world, but you are also shielded from the potential tariffs impact, for the potential exchange rate impact, etc. So in principle, we are kind of in a very balancing position regarding the exchange of dollar and euro.
The last question is about Accoya USA. What is the EBITDA potential of Accoya USA at full capacity? And when do you expect to realize this level?
We are targeting to reach levels above 15% in the second and third part of our strategic path. At the end of financial year 27, we are looking at the overall group EBITDA percentage of 12%. We are, of course, working very, very hard to achieve this and hopefully to do better than that. If you are looking at the profitability today that is being extracted in Arnhem and Barry as an operating site, it's a far above 12% range. Nevertheless, Accoya USA is a much more efficient plant in terms of raw materials flows. So we have a pipeline with Eastman, and then we are buying acetic anhydride directly via the pipeline through our production facility. But at the same time, our byproduct is being sold back to Eastman and pumped back. So there is a much less logistics costs, and the plant is much more efficient per design. So I would say we gave ourselves the targets for the EBITDA profitability, and we are focusing to reach those.
Now a question about Accoya Color. What are the growth opportunities of Accoya Color, and could you please explain the margin differences with Accoya?
Accoya Color is a product that is being colored through the core. So that means we are using acetylated wood, and then we are impregnating it with a pigment, creating this specific product range. It does have additional step in its production, but also the margins of the product are generally higher. We saw very strong growth in Accoya Color in the previous financial year, FY25. This product is being produced in our Barry facility, and we are actually doubling capacity in Barry by introducing additional shifts in this year to meet very much growing demand of Accoya Color.
Over the past 2 years, you have made changes to the Accsys organization, for instance, improving efficiency. Are there still further possibilities for process improvements at the Arnhem plant?
Oh, absolutely. There is always a possibility for more improvement, and as a responsible manufacturing company, we are really focusing to get those efficiencies out for the benefit of everybody. So there is certainly opportunity to reduce the cycle times. There is an opportunity to tweak. Last financial year, we tweaked the performance of our distillation columns that are providing us a lower usage of acetic anhydride, getting exactly the same results on the acetylation level in our plant. So there are logistic optimizations. There are a lot of stuff that could be done in a plant always to make it more efficient and more profitable. And we are certainly with our solid route program that was announced when I joined. One of the reasons why that program exists is actually to deliver that efficiency that we believe exists in the plants.
Now coming to the last question of this interview. Large investments projects have been done, and you have improved the operational efficiency of the company. Combined with ample capacity, what is the outlook for the free cash flow development for the next few years?
Well, I'm very proud to say that Arnhem and Barry are already strongly free cash flow generative already in the previous financial year, and they will continue on that path. In the Accoya USA, we are focusing this year to get that joint venture to become profitable, and then in the next coming couple of years, to become free cash flow generative as well. Let's not forget that US has quite a lot of financial costs that need to be covered in order to generate a free cash flow. So far so good, and we are going to continue on this trajectory.
Excellent. Thank you, Jelena, for answering the questions we received from our audience. Thank you very much for joining me today.
Thank you, Johan. It has been my pleasure, and hopefully we will talk soon again.